Gold mutual funds are a type of mutual fund that invest primarily in companies engaged in the exploration, mining, production, or distribution of gold. Gold funds are a type of mutual funds that directly or indirectly invest in gold reserves. Mutual funds are investment vehicles that pool money from multiple investors to invest in a diversified portfolio of assets. Gold mutual funds provide investors with exposure to the gold industry without the need to directly own physical gold. These funds typically invest in the stocks of gold mining companies, which can be either large established companies or smaller companies focused on exploration and development. The performance of gold mutual funds is closely tied to the price of gold and the overall performance of the gold mining industry. Why choose gold mutual funds? First of all, because of its diversification. Gold mutual funds can provide diversification within an investment portfolio. Gold often has a low correlation with other asset classes, such as stocks and bonds. By adding gold mutual funds to a diversified portfolio, investors can potentially reduce the overall risk and volatility of their investment holdings. Next, it gives investors an exposure to the gold industry. Gold mutual funds offer investors exposure to the gold industry without the need to directly own physical gold or invest in individual gold mining companies. This allows investors to participate in the potential price appreciation of gold and benefit from the growth of gold mining companies. It is also high in liquidity and convenience. Investing in gold mutual funds is relatively convenient and provide liquidity compared to owning physical gold.
We will go to advantage of gold mutual fund. First, no storage issues. Investing in physical gold have its safety issue, as you will need to store your gold in safe place like bank's locker or safe at home. This problem do not occur with gold mutual fund as it is an electronic investment. Next, allows investor to start small. An individual can invest as little as 100 ringgit in gold funds as lump sum or SIP. Besides, it is less volatile. Whenever there is economic crisis, the market fluctuates and stocks are first to be affected. Gold mutual funds could serve as good hedge against the equity market volatility. When stocks down, the price of gold will move up. Hence, investing in gold through funds is likely to balance out any volatility in equity investment. Not just that, it has liquidity benefits, as gold is highly liquid commodity. If there is urgency of cash, they can be easily converted in cash once it is redeemed. The benefit of liquidating gold mutual funds over physical gold is that you have the flexibility in the amount convert to cash.
Next, let's look at some disadvantages investors may face when investing in gold mutual funds. Firstly, lack of diversification. Gold mutual funds typically focus solely on investing in gold-related assets, such as gold mining stocks and gold bullion. This lack of diversification can increase investment risk. The second disadvantage is volatility and price fluctuations. The price of gold can be highly volatile, which means that the value of a gold mutual fund can also experience significant fluctuations. Investors who are not comfortable with the potential for price volatility may find gold mutual funds to be unsuitable for their risk tolerance. Next one is inflation risk. While gold is often considered a hedge against inflation, it does not guarantee protection against rising prices. The relationship between gold prices and inflation can be complex. And the next disadvantage is potentially underperformance. Gold prices can be influenced by various factors such as global economic conditions, interest rates, and investor sentiment. If these factors do not align favorably for gold, a gold mutual fund may underperform compared to other investments or broader market indices. Lastly, limited income generation. Unlike stocks or bonds that can provide regular income through dividends or interest payments, gold does not generate ongoing income.
Next, we can look at the return of investment in gold mutual fund. Gold mutual funds have inverse return rate of investment as is different from other mutual funds and it will be shy when things go wrong. For circumstance, inflation and economic recessions, unstable politics will cause gold mutual fund will be rising its rate of return. For example, gold mutual funds are heavily demanded in US when there's a lot of uncertainty in the banks and OPI. Next, gold mutual funds also have low correlations as compared to major stock and fixed income assets. It tends to hold its grounds well and also faster to recover during uncertainty of economies. Besides, you also have higher rate of return as overall the rate of return is 19% and is steadily rising since 2019. Based on study, it is said to get a return of 10 to 15% in 2023 this year with low risk expectation for the investor.
First of all, the market risk. This volatility can affect the value of the mutual fund, resulting in potential losses for investors. The second one is the liquidity risk. The gold mutual funds may face liquidity issues if there is a sudden surge in redemption requests from investors. In such cases, the fund may need to sell gold holdings quickly, which can lead to potential losses or lower returns. The third one is the regulatory risk. The changes in government policies, regulations, or taxation related to gold investments can impact the performance and profitability of gold mutual funds. Investors should stay informed about any regulatory developments that may affect the investment. The last one is the currency risk. The gold prices are typically quoted in US dollars. If the investor's local currency weakens against the US dollar, it can diminish the returns when converted back into the investor's currency.
As for the conclusion, we can say that Gold Mutual Fund is one of the best mutual funds to invest in the market situation right now. Apart from that, Gold Mutual Funds is low risk if compared to other types of investments such as stocks and bonds, which are really fluctuates and volatile in the market. Last but not least, Gold Mutual Fund can also act as a hedge when financial markets are in turmoil.